Greetings, healthcare heroes and biopharmaceutical enthusiasts, and welcome to Stocks Telegraph. Today, we're setting our sights on Novavax, a name that's been swirling in the headlines for the past couple of years. Remember the initial excitement surrounding their COVID-19 vaccine? While things haven't exactly gone according to plan, recent developments have ignited a spark of renewed interest. Just last quarter, Novavax's share price doubled in a single day following some positive news. So, what caused this sudden surge, and more importantly, is Novavax a stock worth considering for your portfolio? Buckle up, because we're about to dissect Novavax's recent performance, explore their future prospects, and see if this biotech company is poised for a comeback. Before we dive into the nitty-gritty, we want to hear from you. Did you invest in Novavax during the initial COVID-19 vaccine hype? What factors would make you consider investing in a vaccine manufacturer? Leave a comment below and share your thoughts. Now, let's shift gears and take a closer look at Novavax's recent financial performance. In the next segment, we'll unveil some key metrics and see if the numbers tell the whole story. Stay tuned. Novavax's financial performance presents a fascinating dichotomy. On the one hand, the current price of $15.50 sits well below analyst expectations. Their main target price of $21.60 suggests a potential upside of over 40%, indicating a possible buying opportunity for some investors. This positive sentiment is further fueled by NVAX's impressive year-to-date and month-to-month performance, exceeding 220% and 290% growth respectively. These figures suggest strong momentum and a potential turnaround story in the making. But the good news doesn't stop there. NVAX boasts healthy financial metrics that shouldn't be ignored. Their gross margin of 64.69% indicates operational efficiency in producing their vaccines. Furthermore, both EPS and quarterly earnings growth are exceeding 100% and 69% respectively. These exceptional growth figures suggest that NVAX is not only profitable but also experiencing significant revenue expansion. This combination of a potentially undervalued stock price and exceptional financial performance is certainly intriguing. NVAX's financial metrics paint a surprisingly positive picture, but there's more to the story. Novavax isn't going it alone. They recently inked a strategic deal with Sanofi, a global leader in flu vaccines. This partnership is a game-changer for NVAX. Sanofi possesses the extensive commercial infrastructure and experience to effectively bring NVAX's vaccines to the forefront of the healthcare provider landscape. This translates into potentially supercharged revenue growth for NVAX, thanks to Sanofi's established distribution channels and marketing prowess. The Sanofi partnership extends beyond simple co-commercialization. The deal grants Sanofi the rights to utilize NVAX's vaccine technology in a groundbreaking way, the creation of multi-inoculation shots. Imagine a single shot that combines a COVID-19 booster with a flu vaccine or other relevant immunizations. This innovative approach could revolutionize the way we approach vaccinations, and it positions NVAX to reap significant royalty payments if Sanofi can generate strong sales of these combination vaccines. While the Sanofi partnership is undeniably exciting, let's inject a dose of realism. The COVID-19 vaccine market is unlikely to replicate the explosive growth witnessed during the height of the pandemic. As the immediate public health threat recedes, so too does the demand for initial COVID vaccinations. However, the Sanofi partnership positions NVAX for a different kind of growth, a steady, sustainable increase in revenue driven by co-commercialization efforts and potential royalties from combination vaccines. Just last year, Novavax faced a harsh reality. Lower than expected vaccine revenue forced them to issue a going concern warning, a stark reminder of the company's precarious financial position. However, Novavax responded with decisive action, launching a major cost-cutting plan that slashed research and administrative expenses by 50% year-over-year in the first quarter. This commitment to fiscal responsibility, combined with the Sanofi partnership that included a hefty upfront payment and potential milestone payments, allowed Novavax to retract the going concern warning, significantly reassuring investors. Novavax's cost-cutting efforts extend beyond immediate measures. They're targeting annual expenses between $700 million and $750 million this year, and their sights are set even lower for the future, a goal of $500 million in annual expenses. This dedication to fiscal prudence positions NVAX for long-term financial stability and sustainable growth. The COVID-19 vaccine market might not be booming as it once did, but Novavax is strategically adapting to this new reality. Recent data reveals a fascinating trend. During the past vaccination season, flu shots were significantly more popular than COVID vaccinations. This consumer preference highlights a potential goldmine for NVAX, their combination coronavirus and flu vaccine candidate. This innovative product caters to a population already accustomed to annual flu shots, offering them the convenience of a single shot for two crucial vaccinations. The Sanofi partnership sweetens the deal even further. NVAX retains the rights to develop and potentially commercialize their own combined COVID and flu vaccine, set to enter phase 3 trials later this year. Furthermore, Sanofi gains the rights to utilize NVAX's vaccine technology in their own combination flu shots. If Sanofi successfully brings these combination vaccines to market, NVAX will benefit from significant royalty payments. This double-pronged approach, NVAX's own product and royalties from Sanofi, opens doors for NVAX to generate revenue from multiple combination vaccines in the future. So, is Novavax a stock you should add to your portfolio? The answer, as always, depends on your investment goals and risk tolerance. Novavax has undeniably come a long way since its initial struggles. They've implemented a successful cost-cutting plan, secured a lucrative partnership with Sanofi, and are developing innovative combination vaccines that address a clear market need. These developments paint a promising picture for NVAX's future, with the potential for sustainable revenue growth and long-term financial stability. However, the road ahead isn't without its uncertainties. The success of NVAX's combination vaccines hinges on clinical trials and eventual market acceptance. Additionally, the overall COVID-19 vaccine market might not reach its former heights. Before making any investment decisions, carefully consider your risk tolerance and conduct thorough due diligence. Novavax presents an intriguing proposition for investors seeking exposure to the evolving vaccine landscape. Their commitment to cost control, strategic partnerships, and innovative product development position them for potential future success. While some uncertainties remain, Novavax is undoubtedly a company to keep a close eye on. Only time will tell if they can solidify their comeback and become a major player in the vaccine industry. Let us know your thoughts in the comments below. Do you believe Novavax has the potential to be a good long-term investment? What are some of the key factors you consider when evaluating a pharmaceutical company? Thanks for joining us on Stocks Telegraph. If you enjoyed this analysis, don't forget to like and subscribe for more in-depth explorations of exciting investment opportunities. Until next time, happy hunting!